Okay, dear student, first of all, welcome to everyone in our ACCA pre-seen December 25 taxation mock. I am Abil Ahmed, CEO and Principal of Abil School of Accountancy. Let's just start. And I have already said many times the highest marks in taxation so far. One of my students, she took, they are 99. Let's see who is going to match that record in this attempt or maybe after that. Okay, let's just start from a very first question. How much late payment interest will Fatima have to pay in relation to her tax liability for the tax year 24-25? How much late payment interest will Fatima have to pay? Let's see. Fatima is a sole trader and pays tax under self-assessment. She made the following payment for the tax year 24-25. First payment on account is 3,700, which she paid on 1st June 2025. There's a problem. If you recall, actually first payment on account is on 31st January during the tax year. Then we have got second payment on account on 31st July after the end of the tax year. Then we have got balancing payment on 31st January after the end of the tax year. So basically, if you look at the first payment account, there's a problem. It was paid late. Second payment account is perfectly all right. In fact, she paid a little bit earlier, surprisingly. Balancing payment is also correct. Only the problem lies in the first payment on account. She should have paid on 31st January 25. Instead of this, she paid on 1st June 25. So how many months she paid late? Feb, March, April, and May. 4 months late. So you have to pay interest of 4 months. 3,700. The interest rate on late payment is 7.75%. How many months? 4 months. Let us use the calculator. 3,700 into 0.775, 4 by 12. 4 by 12. Students, I'm getting 95.58. If you are not getting the exact answer, go for the closest one. So obviously 96 without any doubt. Without any doubt, this question came on from the topic self-assessment. A good question, I would say. Okay. Which two of the following statements? Just a minute. Zoom in, zoom in, zoom in. Now it's fine. Which two of the following statement concerning the tax treatment of a company cars provided to employees are correct? The car benefit is based on list price. Makes sense when the car was provided. True, 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 true. List price. If you recall how much employer has paid, it is irrelevant. The main thing is list price. So car benefit is calculated on list price, which is perfectly all right. If a car is more than 6 years old, then it's first provided to an employee. The benefit will be based. No, 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 no. There's no such thing. There's no 6 year rule, something like that. If the employer purchases a car less than the list price, the car benefit, no. If accessory costing 150 are purchased fitted, there's no such rule at all. The cost of insurance paid by the employer is treated as a separate, no, no, no. Actually, insurance which employer pays, it is already included in the car benefit. So there's no need to, it is not treated as a separate additional benefit. The cost of providing a chauffeur, yes, if someone is such a significant employee that in addition to the car, employer has given him a chauffeur as well, who opens the door and closes the door of the car, of course, is an additional benefit, separate benefit. So logically, the first one and the last one. Okay. What is the maximum capital allowances Ravi can claim for the year ended 31st March 2025? Maximum. Ravi, a sole trader preparing accounts to 31st March each year on accrual basis. Thank you. On 1st May 2025, he purchased new office furniture for 15,000. Stop. Entire 15 will be covered in annual investment allowance. So entire 15 will be a part of capital allowance. Zoom out, zoom out, zoom out, zoom out, zoom out. Wow, 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 how much? Apologies if it is so small. Okay. He bought second-hand electric car for 22,000. Zero CO2 emission. The car used solely for the business purposes. Second-hand, and the car value is 22. Now listen carefully, student. Only if it is a zero emission car and a new car, then you get 100% first year allowance. Otherwise, if it is a second hand car, even though it is a zero emission car, still we will treat this like a standard emission car and you will be getting normal 18%. You will not get 100%. If I take 18% of 22,000, calculated, it is 3960. And we know that one more thing, capital allowances are available according to your accounting period. It has nothing to do with the date of purchase. So I'll get 18,960. This is the maximum capital allowance which we'll get. So option is, wow, C. Great. So far, everything looks, I would say, nice. Let's move. Wow, wow, wow. What is this? What is this? If Umar makes a terminal loss, if you recall, terminal loss is the loss of last 12 months. If Umar makes a terminal loss relief claim to use his loss as early as possible, how much loss will be set off against his income for the tax year 21-22? First of all, you need to understand terminal loss is the loss of last 12 months of your business. Second, in terminal loss relief claim, we carry back the loss for 3 tax year and we set off the loss only against the trading profit from the same trade on LIFO basis, last in first out. Repeat, terminal loss, carry back for 36 months, set up against the trading profit only on LIFO basis. So which means that in the last year tax year, which is 24-25, we are having a terminal loss of 63. So the previous tax year is 23-24. How much you will deduct from this 63,000? 23-24. We will utilize 12,000 loss.
Right.
Then kindly please students. So 23-24, 12,000, then 22-23. I'll utilize 36. Let's see how much terminal loss is left. 633 minus 12 minus 36, 15,000. So the remaining loss is 15, which I can maximum utilize against the trading profit of 21-22. So the option is A. Let me repeat. Terminal loss is the loss of last 12 months of the business. In terminal loss relief claim, what do? We carry back the loss for 3 tax years, set up against the trading profit from the same trade only on LIFO basis. Let's move. Identify by clicking appropriate box whether the following would represent tax avoidance or evasion. Actually, tax avoidance is legal. Tax avoidance means by using taxation rules, you want to get the benefit, and the benefit is you will be saving the tax. Tax evasion means which is illegal. Now you are trying to save the tax, but which is not a legal way, which is illegal way. So we have to find out which transaction is actually representing tax avoidance and which transaction is representing tax evasion. Delaying the sale of an asset until the following year to benefit from additional annual exempt amount, that is perfectly okay. There's a possibility that in the current year you have already sold the asset, you have already utilized annual exempt amount. So you wanted to sell another asset, but you want to delay it to get annual exempt amount of the next year. Perfectly fine. Tax avoidance. You will be saving the tax. Including the gain on the sale of an asset by a husband on his wife's what? Now, this is you are doing something illegal. Read it again. Including the gain on the sale of an asset. Who sold the asset? Husband. Got a gain. Now, what husband wants to do? An asset by a husband on his wife's, and you are putting that to your wife's tax return. That is illegal. Evasion. Transferring savings from bank account to ISA, individual saving account, so that interest is earned tax free. Perfectly all right. We have got two options. One, you can deposit in XYZ bank account where you have to pay interest. You can just transfer money from the bank account, bank saving account to ISA. Obviously, we know that interest income which we are getting from ISA, even the dividend income which we are getting from ISA, it is exempt. It is tax avoidance. Perfectly all right. Taking advantage of a loophole in the tax legislation to save income tax, again, perfectly okay. If you are able to find out any loophole in the taxation and you are getting benefit from that, it's okay. Tax avoidance, perfectly okay. So the main concept is tax avoidance is legal, evasion is illegal. How will Quantum Limited pay its corporation tax liability for the year ended March 25? It's very simple. If your organization, your company is a large company, then you will have to pay corporation tax in 4 equal installments. Otherwise, you will be paying corporation tax on 9 months and 1 day after the end of your chargeable accounting period. How to identify the company is a large company or not? It's very simple. If your augmented profit is more than 1.5 million, then your company is a large company. And this 1.5 million augmented profit limit is prorated if your chargeable accounting period is less than 12 months. Second, it is also prorated if you have got number of associated companies in the group. Associated means simply your subsidiaries where your holding is more than 50%. Let's see. Quantum Limited has 2 associated companies for many years. Now stop. 2. It means in the group altogether there are 3 organizations. Now you might be thinking, sir, it is written 2 associated. So don't forget parent. So altogether there are 3 companies, which means that augmented profit limit is 1.5 million, but for this group it is going to be 1 upon 3, 5 lakh. It means if the profit is more than 5 lakh, then company is a large company, and large company will pay corporation tax in 4 equal installment. Quantum Limited has 2 associated companies for many years. For the year ended March 2025, its taxable total profit 960. Of course, you are a large organization. For the year ended March 2024, its taxable total profit was 630. So you can see that this organization was large in the previous year, and this organization is also large in the current year. So just do one thing, 9 lakh 60. I will take simply 25% of this and then 1 upon 4. Let's see what are we getting. 9 lakh 60 and this. I'm getting 60,000. So you will be paying corporation tax in 4 equal installments. And let me tell you one more thing. If it is the first year of your company to be a large company, if it is the first year of your company to be a large company, then you will not be paying corporation tax in 4 equal installments unless your augmented profit exceeds 10 million. Otherwise, you will not be paying corporation tax in 4 equal installment. But if you look at the data, come on, please, students. What is the meaning of 4 corporation tax? 4 equal installment. Please, student, look at this. You have to be little bit good in maths. 3 upon 12 or 1 upon 4, it's the same thing. What you will get? Students, please. If someone is writing 1 upon 4, someone is writing 3 upon 12, it's the same thing. Okay, now. What is the amount of unused trading loss Horizon Limited can carry forward to the year ended 31st March 2006, assuming it claims loss relief as soon as possible? Under corporation tax, student, first I'll be, as soon as possible means first I'll be deducting the current year loss against the current year total profit. Then we can carry back maximum 12 months. But we cannot directly carry back. Then whatever loss is left, it will be carried forward. And they're asking us carry forward. So March 24 and March 25. I've got trading profit 32,000. There's a loss of 86. While solving the question, actually, we don't write loss. We have got property income 7,600, 9,800. We have got chargeable gain, which is 15,000. We have capital loss. Capital loss can only be deducted against the capital gain. And I cannot carry forward the capital loss. Capital loss is deducted against the current year capital gain. Otherwise, this capital loss will be deducted against the future capital gain. So that will give us the total profit. Let's see the amount of total profits. 32,000 plus 7,600 plus 15,000. I'm getting 54,600, 9,800. Logically, first I'll be utilizing the loss against the current year loss relief. Then carry back 12 months. We cannot directly carry back the loss. Carry back 12 months. So out of 86,000, logically 9,800 we will be utilizing in the current year and 54,600 in the previous year. Whatever is left, that will be carried forward. 86,000 minus 9,800 minus 54,600. Students, I'm left with 21,600. This will be carried forward, and this is what examiner is asking us. 21,600. So far, I would say looks past paper or pre-seen okay. But you should appreciate the entire ACC examination team that they tried their best to cover almost the entire syllabus. We've seen a question on, I think it was terminal loss also. Okay, what is Priya's child benefit income tax charge? CBC. Tax year 24-25. Priya is gross annual salary 65, more than 60,000. Husband salary is 30. Child benefit they receive is 3,994. First, let's calculate child benefit charge percentage. Husband and wife, whoever is having a higher adjusted net income will take that. So Priya is having 65 minus 60,000 divided by 200. Whatever comes, that will be your percentage. Logically, in the numerator, you will have 5,000 divided by 200. I'm getting 25%. So child benefit charge is going to be 25%. For example, instead of 25%, assuming your answer was 24.8, I'm just assuming, okay? In that case, we would have taken 24% because the rule says round down, okay? In case of decimal, round down in percentage as well as in amount. Let's calculate child benefit charge amount. 3094. Let's take 25% of that. 3094, 25%. Students, I'm getting 773.5. Mathematically, it should become 774, but we don't follow maths. Rule says round down, round down. So you will eliminate these points value. So I'll get 773. In case of percentage, I said if your answer was, let's assuming 24.8%, then I would have taken 24. Let me take the question from the chat box. Okay, this is the answer. 773 is the answer. Perfect. Let's see. Okay. Identify by clicking the appropriate box the tax treatment of the following types of income of an individual. You have to tell us either it is taxable or exempt. Interest from building society, of course, taxable. Premium bond winning is exempt. Interest from national saving investment certificate is exempt. If you're getting interest from treasury stock, is taxable. Okay. Now, what are the SARA's class 4? Question. Any question? Students, simply take it like a bond. I hope everyone knows what is bond. Now let's come here. And it is included in my focus notes as well. Sarah has taxable trading profit from self-employment 78,500 for the year ended 5th April 2025. During the tax year 24-25, Sarah made a gross personal pension contribution 6,000. If you're making gross PPC, that will not reduce your self-employment income, but obviously we know that it increases your basic and higher rate band. But here we need to calculate class 4 NIC. Class 4 NIC is payable on trading profit. And this trading profit is more than 50,000 to 70, which means that first 50,000, 270 will deduct 12,570 because first 12,570 class for NIC rate is 0%. After that, it is 6%. And let me tell you one thing. NIC rates, limits, they will be given to you in exam. 78,500 minus 50270, then into 2%. 50270 minus 12,570, I'll take 6% of that. 2262. 78,500 minus 50270, let's take 2% of that. Student, I'm getting 564.6. Let's check. 78,500 minus 50270, then into 2%. I'm getting 564.6. So make it 565. Let's see, everyone is getting the same answer. Yes. 2262, so 28. 27. Wow. The option is beta. Okay. What is the maximum number of days which flex can spend in the UK during the tax year 24-25 can be treated as automatically not UK resident for that year. Flexi works full time overseas during the tax year 24-25. Whoever works full time in overseas, Flexi was resident in the previous tax year in the UK, but in the current tax year is working full time overseas. If someone was a resident in the previous tax year, but in the current tax year works full time overseas, you can still be non-UK resident automatically if you're spending maximum 90 days. For that, let me just share the notes with you so that you can see. Let me pause the video and just share the notes. I hope everyone can see this screen. Can you see this automatic non-UK resident? Step 1, automatic non-UK resident. If you see the point number 4, maximum 90 days in a tax year who works full-time overseas. Students, can you see that? Step 1, automatic non-UK resident. Read point number, I think 3, where it says maximum 90 days in a tax year who works full-time overseas. This is from the focus notes, and that's page number, I believe, 77, which is the last page of our notes. And within 77 pages, we covered each and everything from your Taxation Finance Act 24. I hope everyone can see this. Let's go back to the, any question? Just a minute. Okay, let's go back to the OneNote. Where is OneNote? So examiner ask us maximum. So maximum he can spend 90 days and is still treated as automatic non-UK resident. Okay. Just a minute. Okay. How much inheritance tax is payable in respect of Maria's chargeable estate? 4,95,000. Okay. Maria died on 22nd March 2025, leaving a chargeable estate as 4,95,000. If you recall, students, whenever we are calculating IHT on death estate, then we do write nil rate band, but from that nil rate band we deduct last 7-year gross CLT prior to death in case of death estate. She made a gross chargeable lifetime transfer 83,000 in June 2023. It is coming within 7 years from the date of death. You can check. 47,000 on 7th April 16. Can I say 47,000 that was made the way back in April 16? It is not coming within 7 years from the date of death, which means that death estate they have given us 4,95,000. Nil rate band is 3,25,000. Less last 7 years gross CLT prior to death. Only one is coming, which is 83,000. 3,25,000 minus 83. It gives me 2,42,000, the remaining nil rate band. Minus 4,90,000. From 4,95,000, we will deduct 2,42,000. It gives us the chargeable estate 2,53,000. Of course, IST rate is 40%. Students, I'm getting 1,12,000. It is 1,12,000. Wow. IST is there also. Okay. What amount of class 1A? What amount of class 1A NIC is payable by Carp Limited in respect of the benefits provided to Lucinda for the tax year 24-25? Class 1A is paid on non-cash benefits and the percentage is straightforward 13.8%, plus this percentage will also given to you in exam. Carp Limited provided the following benefit to one of its employee Lucinda during tax year 24-25. Private medical insurance costing what? That's a non-cash benefit. Lucinda made a claim during the tax year. How much Lucinda made a claim? It is irrelevant. Cash vouchers 2500, that actually falls when if we were required to calculate class 1 employer NIC. So cash benefit, we do provide NIC on cash benefit, but that is class 1 employer and employee NIC. Right now we have been asked to calculate class 1A employer NIC, which is only on non-cash benefits. So 1400 into 13.8. Let me use the calculator. 1400 into 13.8. Students, I'm getting 193.2. Of course, the closest one will go towards 193. Okay. What is the amount that will be subject to an annual allowance charge? I think one of the student, she asked the question on this annual allowance charge in our WhatsApp group as well. Actually, when someone is contributing more than the available limit of annual allowance, then it results in annual allowance charge. On that annual allowance charge, you have to pay income tax. And applicable income, simply that annual allowance charge treated as a non-saving income. What is the amount that will be subject to annual allowance charge in rupees income tax computation? Tax year is 24-25. Okay. Wow. Buffet suggested income is 280. It is more than 260. When someone is having adjusted income more than 260, then available annual allowance limit, which is 60,000, it will reduce. Annual allowance is 60, but it will reduce to 80 minus 260. Then I'll take 50% of that. So logically in the current year, we have annual allowance 50, but if you have any unused annual allowance in the previous 3 tax year, that will be added to this 50,000. We will add brought forward unused annual allowance. Let's see. During the tax year, she made personal pension contribution 85 gross. Okay. Buffet has no brought forward unused annual allowance. Does not have any. Okay. So available is only 50. Logically available annual allowance limit is 50, but she contributed 85, which means you contributed 85, available limit is 50, so the annual allowance charge is 35. And logically, annual allowance charge is treated as your non-saving income. But right now, they're just asking annual allowance charge limit amount, which is 35,000. Wow, corporation tax. Which companies are within a chargeable gains group with Apex Limited? Select all that apply. Now listen, student. In a 75% capital gain group, the direct holding of the parent must be 75% at least. Second, at each level, it has to be 75. What do you mean by at each level? For example, A is having 80% holding in B. So obviously they are making 75% capital gain group. Now B is having, let's say, 75% holding in C. So parent direct holding has to be 75%. Second, at each level it has to be 75, and effective holding of the parent must be more than 50%. A to B, is of course meeting the criteria of 75. B to C, 75 is there, but we have to check either is a part of group with C is making a 75% capital gain group with A or not. So I'll take 80% of this. Just I'm explaining. I'm getting 60%. So logically, C is also a part of capital gain group with A. But now, assuming C is having 70% holding in D. Now listen, the holding is 70. We will not check at all either D is a part of group or not. Why? Because from C to D, the holding is not at least 75%. I will not check effective holding. I don't care the holding is, effective holding is either more than 50%. The main concept is at each level it has to be at least 75. After that, ultimate parent holding must be more than 50%. D does not meet that criteria. Now let's apply here. And they're asking which companies are within chargeable gains group with Apex Lim. Who comes with Apex? You have to tell us this, okay? Apex owns 85% ordinary share capital of Bridge. Stop. So Bridge is a part of 75% capital gain group because Apex owns directly in Bridge how much? 85. Bridge Limited owns 100% ordinary share capital of Catalyst. So definitely Catalyst is also a part of capital gain group with Apex. Why? Actually, A is having 85% holding in B. B is having 100% holding in C. So obviously, if I check effective holding of ultimate parent A, it is also 85%. Bridge Limited owns 75% ordinary share capital of Dynamic also. Wow, wow, wow. B is having how much? 75% holding in Dynamic. So one thing from B to D, the holding is 75. Yes. Now we have to check the effective holding of ultimate parent Apex. If that is more than 50%, then Dynamic will also become a part of capital gain group. So 75 into 85. Let's see. Students, I'm getting 63.75. So it means Dynamic is also a part of 75% capital gain group. Catalyst on no. 16 Eclipse. We will not check Eclipse at all. No matter. Effective holding becomes more than 50%. But the rule says at each level it has to be at least 75. So from C to E, the holding is 60. So I will not check either Eclipse is a part of 75% capital gain group or not. Even it meets the criteria of effective holding more than 50%, still E cannot become a part of 75% capital gain group because from C to E, the holding is not at least 75. It is less than that. So maximum 3 organizations, they are part of 75% capital gain group with Apex, Bridge, Catalyst and Dynamic. I hope it is crystal clear to everyone why Eclipse is not a part of 75% capital gain group with Apex. So, okay. Student section B, let's see the first question. From what date would Zara have been compulsorily required to be registered for VAT and start charging output VAT on her sales? Actually, compulsory registration is either you meet future test or historic test. Any one of the tests, if you meet, then of course it becomes compulsory to register your business from VAT authorities. If you recall the historic test, if your previous 12 months or shorter taxable turnover exceeds 90,000, then it becomes compulsory to register your business with the VAT authorities, and within next 30 days, the day you are exceeding 90,000, from that day onwards you have 30 days. Within next 30 days you have to inform HMRC, and on a very first day after that 30th day, your business will be registered from the VAT authorities and you will start charging VAT. Let's see. Zara started trading on first. Zoom in, zoom in. Zara started. Oh no. On 1st January, trading on 1st January 24. Selling standard rated clothing and accessories, she registered voluntarily on January 24. But they're not asking voluntary, they're asking when is compulsory. The following information is available. All figures are stated exclusive of VAT. Zara standard rated sales includes starting to trade. If you look at the first 4 months, it is 30,000. In the first 4 months, taxable supplies total is 30. Then in the next 4 months, 9,500 into 4. I'm getting 38,000. If you just use the calculator, 38 plus 30, I'm getting 68. 68 minus 90. It means if I get 22, more than 22, so I will simply meet the criteria. If you look at this 11,500, which means that 11,500 per month, 11,500 plus 11,500, it becomes more than 22, I believe. 11,500 into 2, 23. If you add all of them, so I'm getting how much? I'm getting 91, exceeding 90. So previous 10 months total is actually exceeding 90,000. So logically, September and October. So end of October, I'll be exceeding 90, which means that I should inform HMRC in next 30 days. Next 30 days means logically I should inform HMRC by 30th November 2024. Inform. I should inform by 30th November 24. But I'll be registered. My business will be registered from a very first day after the 30th day period, which is going to be. So logically from 1st December 24, your business will be registered and you will start actually charging output VAT. It is historic test is met. Okay. What is the total amount of pre-registration input VAT that Zara was able to recover on her first VAT return when she registered voluntarily on January 24? Let's see. Either you bought goods before in pre-registration period or services. For services, the time period is only 6 months, not more than that. Let's see, let's see, let's see. Pre-registration cost. Before registering for VAT on January 24, Zara incurred the following standard rated costs on 12 October 2023. She bought a new car, 9,500. She still has the car and uses 80% for the business purposes. Wow, wow, wow. Your car is having a private use. When you bought a car, number one, and it has a private use, then you cannot get input VAT which you have paid. Otherwise, of course, if the car was used 100% in the business, then you would have received your input VAT because you are still holding the car. It was, but right now, due to, I would say, private, there's a private use portion is there. That is why you cannot get what input you have paid on that car. She paid the following amount for website design services. Student, if you recall the services which you have taken for the business, only in previous 6 months, if you have taken any services, the time period is 6 months. Okay. Business was registered on this 1st January 2024. Can I say 13 March 2023? It is more than 6 months before the registration. So the services which you have taken on 13 March 2023, whatever input you have paid, it is not recoverable because the time period is more than 6 months. But look at this 23rd September 23 from here till 1st January. This service actually falls within 6 months from the date of registration. So you will get VAT input. So 2000 into 20%, it is mentioned in the question. All figures are stated exclusive of VAT. So I'll take 20% of this, which is, do we have any option? Yes. 400. Okay. Identify, identify the VAT tax points for the deposit and the balancing payment received for the bespoke necklace. Select your answer by clicking the appropriate boxes. VAT tax point, let's see, VAT tax point is here. Zara occasionally, just, I hope it is readable now. Zara occasionally sells some unique high value items. On 1st Feb 2025. She receives an order to the bespoke necklace. The customer paid a deposit 2000 on 1st Feb 2000, first on 10th Feb 2025. Now stop. Before delivering the goods, if you have received the cash in advance, that actually becomes your actual tax point. Otherwise, we know that in case of goods, the basic tax point is when you have delivered the goods, when you have dispatched the goods. In case of services, the basic tax point is when you have rendered the services. But if you receive amount in advance, that date becomes actually your actual tax point. So for this 2000 deposit, tax point is 10 Feb 2025 for the deposit. Tax point for deposit is 10 Feb 2025. Okay. The necklace was dispatched 1st March 2025, which is the basic tax point. And the invoice for the balance £3,000 was issued. Wow, 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 wow. Students, good underline, I would say, very clean. Students, the basic tax point is 1st March 25, but you have issued the invoice within 14 days of the basic tax point. When you issue the invoice within 14 days of the basic tax point, then it becomes your actual tax point. So logically, it will be 12th March 25. Let me see the question. Yes, great. What is Zara's monthly VAT payable if she joins the flat rate scheme from 1st April 25? You should assume that flat rate percentage is 7.5%. Actually, in a flat rate scheme, what happens? We take all the supplies inclusive of VAT and simply we multiply with the flat rate percentage which they have given us 7.5%. It will directly give you the VAT payable. And read the question nicely. They're not asking annually, they're saying monthly. What is the Zara's monthly VAT payable? Monthly, okay? Flat rate scheme. Zara is considering joining the flat rate scheme from 1st April 25. From that date, her expected standard rated turnover will be 11,500. Her standard rated purchases, so we have nothing to do with the purchases because in a flat rate scheme, what happens? You calculate all the supplies inclusive of VAT, then multiply by flat rate percentage. So 11,500 is exclusive of VAT. It is mentioned in the question. It says standard rated supplies, so multiply by 1.2. Actually, another way is if you take 20% of 11,500, add that into 11,500, you will get VAT inclusive value. So by multiplying 11,500 with 1.2, you will still get the same result. Into 7.5 will directly give you the VAT payable. Students, I'm getting 1035. I'm getting 1035. Let's see. Do we have options? Fill in the blanks. Oh. 1035. Which two of the following statements are true? If Zara joins the flat rate scheme, which two of the following statements are true? Zara must still charge output VAT 20%. Yes, of course, you have to charge. Zara no longer needs to issue VAT invoices. False, you have to issue VAT invoices. If Zara total VAT inclusive turnover for the previous year exceeds 230, she must leave the scheme. True. If Zara joins the flat rate scheme, she cannot join, and it's a false. You can join annual accounting scheme. So the answer is A and C. Okay, just a minute. Wow. Students, kindly read the scenario once, then we'll be discussing, inshallah. Formula. So as I was just telling you, students, taxation paper actually needs that you should be having a good memory skill. You should be able to memorize the rules. If you can recall the relevant rules at relevant place, taxation paper will never disturb you. But if you are unable to recall the relevant rule at relevant place, then obviously paper will not leave you without disturbing. And you should give credit to our entire course where just one lecture is on average 30 minutes long. It's not more than that if you take out the average. And to be very honest, within 40 hours, the entire course gets completed. And I hope you should appreciate the WhatsApp support as well, because we claim that we have got the best WhatsApp support in the entire world. No teacher assistant. I personally reply all the queries. Okay, student, let's start. What is this? I hope everything is okay. Just a minute. See, something went wrong. I told you. Let me check. It's 22. Still, it's okay. Come here. Fine. Let's try. Oh. Just a minute. What was the gross chargeable amount of the chargeable lifetime transfer on 20th August 17 for the purpose of calculating any additional tax due on Baron's death? If you recall, in case of gross CLT, can I say, student, if you recall the rule, in case of gross CLT, if donor dies within 7 years of making that gross CLT, then on that gross CLT, you have to pay death tax as well. But we know that if donor dies at least after 3 years, you will be getting a taper relief plus IST, which was paid during the life, it will be deducted also. But that's a separate story. The main rule which examiner is asking you, give us the gross chargeable amount in the event of death, which will be chargeable for additional IST. Rule says after gross CLT, if donor dies within 7 years, then it becomes Chargeable. Okay, let's see. Lifetime transfers 10th May 15. We have a PAT. They have categorically mentioned this. Chargeable lifetime transfer is 350, 340. Who paid? Brian. Student, if you recall, can I say if donor pays IST on CLT, in that case, whatever, number one, IST rate is 25%, and whatever IST is paid by the donor, it will be deducted, it will be added to the chargeable lifetime transfer. Yes or no? When donee pays, we don't add, but when donor pays, we do add. Is that clear, students? Yes or no? Students, please reply. Can you please reply the rule if you're able to recall? Students, they are saying yes. Okay. And we just need to calculate what happened during the. So examiner has directly given us a chargeable lifetime transfer. Chargeable is 340. Chargeable lifetime transfer. Chargeable means which is after annual exemption. Chargeable. Nil rate band is 3,25,000. I'm calculating lifetime tax. Less last 7 years gross CLT prior to gift. We do not have prior to gift, we have PAT, we will not deduct that. Entire 325 is available. So your taxable amount is 15,000. 25% is paid by donor. Student, I'm getting 3750. So logically 340 plus the IST which donor has paid. So let's see how much we are getting. I'm getting 3,43,750. Let's see. Do we have any option? Wow. Just wow. 3,43,750. Nice. Let's go ahead. Where to go? Oh. Just a little bit alignment. Extremely sorry. Went wrong. I hope it is readable now. For each of the following statement regarding IST exemption for lifetime gifts, select whether it is true or false. You have to tell us either it is true or false. Let me zoom in. Zoom in. Now it's fine. A marriage exemption of 2,500 is available for lifetime marriage gift to nephew. No, false. From where the nephew is coming? Should have been 1,000, something like that. 2,500 is false. If an individual makes 5 gifts of 240 each to 5 different individuals, no issue at all. During the tax year, it's a small gift exemption. You're not exceeding 250 limit, so exempt. True. If a PAT is made before CLT but in the same tax year, the 3,000 annual exemption must be used against. Of course, we always solve the question in a chronological order. If in the question there's first PAT then CLT, so annual exempt amount in the first will be deducted against the PAT. Even if it never becomes chargeable, yes, true. Any unused annual exemption brought forward from the previous tax year should be used before the annual exemption. No. First, you will be using the annual exemption of the current year, then unused. So we have got false, true, and false. Wow. Till here, everything is under control, I would say. Just a minute. Apologies, we have to zoom out. What is the maximum total amount of nil rate band? Maximum. Zoom in. What is the maximum total amount of nil rate band and nil rate band is 325, okay? And residence nil rate band 1,75,000 to set against Brian's death estate. So we need to find out the maximum nil rate band and residence nil rate band. Let's see. Death estate. Baron's death estate was valued, wow, 1.25 million. This included his main residence valued 3,50,000, on which there was an outstanding mortgage. So 350 minus 1 lakh, I'm getting 250. So 250 itself is more than 175. His other asset included investment in cash. Okay. The whole of the estate left to Baron's daughter Sufia. Can I say? When the main residence is left to the direct descendant means children and the grandchildren. Only then you get residence nil rate band. And here it is left for the direct descendants. That is why residence nil rate band in addition to normal nil rate band is available. Okay. Byron's wife Aisha died on 20th March 2010. She had made no lifetime gifts and left her entire estate to Byron. The nil rate band was also students. If you read the question nicely, Mr. Byron's wife died the way back and she did not make any gift at all. It means that nil rate band, because of the death of the first spouse who did not utilize it, all will be transferred to the Baron. So on the death of Byron, there will also be available, which means that the normal nil rate band of Byron himself plus which is coming from the wife also. But interestingly, 1,70,000. So this is, let me use a calculator. 325, 6,50,000. 1,75,000 of Byron, 175 is coming because of the wife. Now, student, here is very interesting something. The total I'm getting is 350. Even though the residence nil rate band total I'm getting 350, but can I say we cannot get 350? Why? Because the main residence value minus the mortgage, maximum residence nil rate band we can get 250. Maximum we can get 250. Even though we do have residence nil rate band 350, but we cannot exceed 250. Why? Whenever we claim residence nil rate band, you will take the value of the main property minus if there is any mortgage on that property. So due to this 250, residence nil rate band will be restricted to 250. So I will take here, add here 250. So I'll consider this a good question. Student could easily have made a mistake. Students, I'm getting 900,000. So I think this is a good question. Seriously. I don't know, you are taking, oh yes, we have the option. It's a good question, the good one. Let's go ahead. Which two of the following amounts would have been deducted, excluded when calculating chargeable value of Byron's death estate? A chattel value? No, no, no. There's no such thing. Byron's outstanding income tax? Yes. If we are calculating IST on death estate and that deceased person is having any outstanding income tax, I have to deduct that. A debt of 5,000 owed to his sister, not legal. No, only legal debts will be deducted. The value of Byron's ISA investment, there's no such thing. Funeral expenses, yes, you will deduct that also. A fee paid 900 to a person, no, no. So logically, it's outstanding income tax. Funeral expenses. Wow. Identify the due date of payment of IST on Byron's estate. Student, if you recall, when do we pay IST on death estate? That is 6 months after the month of death. Who pays? Representative. Identify the due date for payment of IST on Byron's estate and who will pay. Let's see date of death. Byron died on 15 Feb. So leave the month of Feb. Go 6 months forward. It will be March, April, May, June, March, April, May, June, July, August. Should be 31st August. And who will pay? Personal representative. Wow, 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 wow. Till here, again, it looks good. Student, that's a section B last question. First, I really want, let me zoom out a little bit. Looks a little big scenario. Just try to read it once so that we can discuss. Read it only once. Let's see the last question of section B. So far, think, oh no, again something went wrong with the alignment. I hope, okay. What are the total, zoom in, what are the total deductions which will have been allowed in calculating the chargeable gain on the disposal of as 3 hectares of land? By reading this 3 hectares of land, the topic part disposal, you should be able to recall. We need to calculate allowable cost for the 3 hectares of land. Let's see. 3 hectares of land. Ash had originally purchased 5 hectares of land for 70,000. How many? 5. On 15 May 2024, Ash sold 3 hectares of land for 150. The market value of unused 2 hectares of land at the time of sale were 50,000. Okay. Before the disposal, Ash spent 12,000 clearing and leveling the 3 hectares of land. So 12,000 is a deductible expense, but that entire 12 only belongs to 3 hectares which you have sold. 12,000 does not belong to the entire 5 hectares. It only belongs to the 3 hectares which you have sold if you read it nicely. So, which means that how to calculate allowable cost? We'll take 70,000 into A upon A plus B. A is 150 divided by 150 plus 50. Simply the disposal proceed divided by disposal proceed plus the market value of the remaining asset. So 70,000 multiplied by 150 divided by 200, I'm getting 52,500 plus entire 12,000 only belongs to the 3 hectares which we have sold. Student, I'm getting 64,500. Wow. We have the option and the choice is beta 64,500. Wow, part disposal. Great. Then what is as chargeable gain? In respect of cash received following the takeover of Rock PLC by Stone PLC. Look at the name. What is as chargeable gain? In respect of the cash received following the takeover of Rock PLC by Stone PLC. We need to calculate chargeable gain against the cash consideration. Let's see. Takeover of Rock by Stone. On 12 December 24, Rock PLC was taken over by Stone PLC. Ash had originally purchased her £1 ordinary share in Rock PLC on 2nd Feb 11 for 21,000. Actually, in case of takeover, what do? We allocate old shares cost according to the market value of the consideration which we receive in the new organization. Under the terms of takeover, Ash received total cash 18,000 and 25,000 £1 ordinary shares in Stone PLC immediately after the takeover. Stone PLC £1 ordinary share was quoted 1.8. It means market value of shares. Market value of shares 25,000 into 1.8. Let's see what is the market value immediately after the takeover. I'm getting 45,000. Ash also received the cash 18. So the total consideration they have received is 63,000. Now previous 21,000 cost will be allocated. Old cost will be allocated to both of them. How to allocate? It's very simple. 21 divided by 63 multiplied by 45,000. I'm getting 15,000. Student, 15,000 is allocated to shares. So how much will be allocated to cash? Obviously 6,000. From 21, if you deduct 6, from 21, if you deduct 15, you will get 6. So what is the chargeable gain against this cash? It's very simple. We receive the cash 18. Allocated cost against this cash consideration is 6. Logically, the chargeable gain is 12. It's a takeover scenario. Again, very easy. But wow, it has become a heart, if I'm not wrong. To make it true, let it heart be there. A very small heart. So students, what I was telling you, in taxation, the main thing is only one. You should be able to recall the relevant rule at relevant place. Then you can get a really good score in taxation. Otherwise, difficult to say anything. What is the base cost of Ash replacement antique painting? For the capital gain tax purposes, what is the base cost of Ash replacement antique painting? So let's see the scenario. One more thing, student, look at one requirement and then just read that particular paragraph, a small paragraph which only belongs to that requirement. If you start reading the entire question, you will just get confused. So look at the pattern. They are putting, the examiner has given the heading also, okay? So we'll be just focusing on antique painting. On 1st Feb 2025, an antique painting owned by Ash was destroyed in a fire. Okay. The painting had been purchased on 8 July 2014 for 27,000. Ash received insurance proceed 59. Basically, if you have received the insurance proceed, then within 12 months, if you reinvest the insurance proceed, within 12 months, if you reinvest the insurance proceed, then there will be no gain, no loss. But if you have received the insurance proceed more than the original cost of the asset, which is destroyed, then additional amount technically works as rollover relief, and that will actually reduce the cost of the replacement asset. Ash received insurance proceed 59 on 19 March 2025, and on 26 March 25 she purchased replacement antique painting for 61,200. Ash will make a claim of rollover relief, the gain arising from the receipt of the insurance proceeds. So very simple. The new asset cost is 61,200. Insurance proceed is 59. Asset destroyed had a cost of 27,000. You receive the insurance proceed more than the cost of asset which is destroyed. So 59 minus 27,000. I'm getting 32. You will be getting as rollover relief. That will be deducted from the replacement cost, from the cost of the replacement asset. That will give us the base cost. Base cost of the new asset is 29,200, and interpretation of this 29,200 is when in the future owner will be selling this antique painting, whatever will be the sale proceed, from that sale proceed owner will be deducting, owner is allowed to deduct 29,200. So here's the base cost. Wow. What is Steve's capital gain tax liability? Student, if you recall, we always, in case of individuals, we always tax capital gain at the end of all other sources of income. Obviously, first we tax other incomes, then at the end we are going to tax capital gain. One thing. Second, normally, if there is a space in the basic rate band, then applicable CGT rate is 10%. In case of residential properties, it is 18. If there is no space in the basic rate band, then it is 20%. In case of residential properties, it is 24. What is the Steve's capital gain tax liability? Steve. Student Steve. Steve made a chargeable gain 5,700 on the disposal of an antique table. 12th number 24. He had made no other disposal during the tax year. It means that annual exempt amount is available. So from 5,700, I will deduct annual exempt amount. Logically, the taxable amount is, taxable capital gain is 2,700. Now we just need to see, is there any space in the basic rate band? If yes, then apply 10%, otherwise 20%. Steve's only income for the tax year 24-25 was employment income. It is employment income 46,000. If I deduct personal allowance 12,570, let's see what is the taxable income. 46,000 minus 12,570. Students, I'm getting 33,430. Basic rate band limit is 37,700. How much we have already actually utilized? 33,430. How much is unused? Students, unused limit in the basic rate band is 4,270, and the taxable gain we have only 2,700. So obviously we'll be using 10%. So CGT payable by Steve is 270. It's 270. Wow. Let's go ahead. What is this? Just a minute. Just a minute. Let me zoom in. Select whether each of the following statement is true or false regarding possible capital gain tax planning. Benefit that could be achieved as a direct result of putting an asset in joint names, husband and wife, with a spouse prior to what? Assets disposal. Making the best use of annual exempt amount, yes, because Jointly owned asset means when there will be a capital gain, it will be split 50-50. So obviously 50-50 means both husband and wife, they will be separately deducting annual exempt amount. So making the best use of annual exemption, true. Making the best use of capital loss, again it is true. Deferring the CGT due date, no, you can't do that. You cannot defer the CGT due date. Reducing the amount of CGT payable, yes, true. That is the benefit of putting on the joint name. So that is section B. Let's go for section C also. Wow. Just a minute. So in section C, first I'll be explaining on the OneNote, then I'll show you how to solve on the spreadsheet. Don't worry at all. But let us first read the question, what it says. We know that in section C, you will have 3 questions, one for 10 marks, one for 15, another for 50. It is going to be 10, 15, 15, 15, 15, 10. 10 marks. For each of 2 alternative ways of jazz making a pension contribution of 25,000. Each of 2 alternative ways of jazz making a pension contribution 25, company pension scheme or additional directors remuneration, then jazz personally making a personal pension contribution. Calculate revised figures for each of the 4 tax and NIC figures already calculated for the year ended 5th April 2025. Using the additional director's remuneration and personal pension contribution alternative, you are expected to produce full income tax and employee class 1 NIC computation. If applicable, you should state if any of the 4 tax NIC figures already calculated remain. If something remains unchanged, you have to explain that as well. First, student, read the question again, requirement nicely again, what they are asking you to do it. For each of the 2 alternative ways of jazz making a pension contribution of 25. We have to calculate revised figures for tax and NIC. Now let's read the scenario so that we will be in a better position to understand what exactly we are going to do it. And this is the scenario. Let me give you the idea. You should assume that today's date is 1st March 2025. Okay. Zoom in. Jazz is the managing director of Malback Limited, owns 100% of the shares. Okay. Malbec technically is a closed company. Closed company is a company where less than equal to 5 shareholders, they have the control of that organization. Malbec Limited has no other employees. Okay. Jazz will receive gross directors remuneration 35,000 and dividends 70 from Malbec Limited for the tax year 24-25. Jazz has no other income. Okay. After adjusting for Jazz remuneration 35 and associated employers NIC, Malbec PLC has forecast tax adjusted trading profit 2,90,000 for the year ended 5th April 2025. Oh, 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 oh. Base figure tax and NIC, Jazz and Malbec for the tax year. Income tax they have calculated for the Jazz is 25,375 when Jazz employment income is 35 and Jazz is getting dividend from the company how much? 70,000. Okay. An examiner has already calculated the income tax and class 1 employee NIC. Okay. Malbec employer NIC is 3574 and corporation tax is 72,500. Okay, fine. Jazz has decided that he should start saving for his retirement. Finally, good. So he plans to make a gross pension contribution of 25,000. gross PPC. Before the end of tax year 24-25. Jazz is considering, for doing this, what Jazz is considering, two alternatives. Malbec company, employer, will make a pension contribution to the company's pension scheme 25,000. Now stop. Look at the first alternative. What is happening? On the behalf of Jazz, Malbec, which is considered this employer, will make a pension contribution to the company pension scheme 25,000. Now listen, when your employer makes contribution on your behalf, either in PPC or in occupational pension plan, it is an exempt benefit. I'm just giving you the idea. It is an exempt benefit. It's going to be exempt benefit for Jazz. Can I say if it is going to be exempt benefit for Jazz? So it will actually not change income tax liability as well as NIC for the Jazz. Is that clear? Repeat, it's an exempt benefit. When employer makes contribution in an occupational pension plan on the behalf of the employee, it's an exempt benefit, which means that income tax and class 1 NIC for simply employee and employer will not change. Only there will be one change. And what is that change? Actually, employer is contributing 25,000 in occupational pension plan on the behalf of for employee, which is Jazz. So that is an allowable expense for the company. So what happens? Already they have given us the information. Just a minute. Malbec has forecast tax adjusted trading profit 290. Actually, due to this 25,000 contribution by the company, your adjusted Malbec Limited has forecast tax adjusted trading profit will reduce by 25 into 25%. There will be your corporation tax liability will change. So 2,90,000 minus 25 into 25. Students, I'm getting 66,250. So let me repeat everything. If company is, your employer is contributing on your behalf in occupational pension plan, it's an exempt benefit. So it will not change. Income tax of Jazz. It will also there will be no change in the class 1 employee and employer NIC. Only the corporation tax will change. That's it. This is what you need to explain for alternative 1. Let's see what is alternative 2 saying. Malbec Limited will pay Jazz additional gross remuneration 25. Student, Jazz is already getting 35,000. Now in second alternative, company will give him additional 25,000 remuneration for the tax year 24-25, and Jazz will make a personal pension contribution. Then Jazz is going to make gross PPC 25. We know that due to gross PPC 25, Jazz basic and higher rate band will increase. But definitely there will be major changes in alternative 2. Let me just give you the hint what are the major changes. Number 1, already Jazz remuneration is 35. Can I say in alternative 2, remuneration from 35, it will increase by 25. Logically, the remuneration will become 60. The dividend is 70, so it is 130. By looking at 130, we need to check adjusted net income. If adjusted net income is more than 1 lakh, then personal allowance will reduce. From 130, I will deduct gross PPC, which is 25. We are getting adjusted net income is 1 lakh 5, which is more than 1 lakh. So personal allowance, which is 12,570. Now Jazz is not going to get the entire personal allowance. Why? Because adjusted net income is more than 1 lakh. Minus 1 lakh. We'll take 50% of this or 1 upon 2. calculator. 12,570 minus 2,500. Student, I'm getting 10070. So Jazz will be getting personal allowance 10070. And then we have to recalculate income tax liability of Jazz, number one. Number two, on this additional 25,000 remuneration, due to this additional 25,000 remuneration, actually we have to, students, recalculate class 1 employee NIC. We have to recalculate class 1 employee NIC. And on this 25,000, there will be additional class 1 employer NIC also. Repeat. We have to recalculate class 1 employee NIC. Remuneration will be 60, which means I'm just giving you the idea, then we'll be properly solving on the spreadsheet. Don't worry at all. 50,270 minus 12,570, then into 8% because of the employment. Then from 60, we will deduct 50270. We'll take 270. Let me properly write this. 50270 will take 2% of this. That will be revised class 1 NIC for employer. Whatever NIC employer has calculated additional 25,000 salary into 13.8, that will give us NIC will increase by 25,000 into 13.8. Now, when will we get, now corporation tax liability we have to revise corporation tax liability we have to calculate. Whatever adjusted trading profit is already given to us, we will deduct 25,000, which is additional remuneration to Jazz. We will also deduct additional NIC. Whatever comes, we'll take 25% of that. So student, there are, I would say, lots and lots of changes in case of option 2. Alternative 2. Let's try to solve this on the spreadsheet. Okay, let me try to make this question little bit, if not too much, at least little bit readable. I hope question is now little bit readable. So students, option 1, where company is actually contributing in the pension scheme. So we know that in option 1, alternative 1, when organization contributes, and we are dealing with question number, what is the number? 31. So when employer contributes an occupational pension plan for the employee, it's an exempt benefit. Okay, come here. Question 31. Malbec Limited pension contribution of 25,000 to company pension scheme is an exempt benefit. So no change on, what is the name of a person? Jazz income tax, and no change on NIC of both Jazz and Malbec. So there will be no change on income tax of Jazz, and there will be no change on NIC of both. Okay, let's take it this. Only corporation tax will change. So revise corporation tax liability. Let me show this to my examiner. We already have 2,90,000 minus 25 into 25%. So now let me show here proper calculation. 2,90,000 minus 25,000 bracket close into 25%. So this is the only change. The corporation tax liability will be revised, nothing else. I hope it is clear to everyone. The main is alternative 2. Alternative 2. Additional salary of 25,000 to Jazz. Now student income tax liability will change, NIC will change. So let's calculate revised income tax liability of Jazz. Already what was he was getting, how much? He was getting remuneration 35. Now remuneration is going to be 35. Already is getting plus 25. Bracket close. Let me show here. 35. There's a dividend income also. $70,000. Take it as net income or total income. Can I say 60 plus 70? It is more than 1 lakh, so we have to check ANI for personal allowance less personal allowance working one. Let me show you working one here. ANI. Net income. Student net income is 1,30,000. We will less gross PPC. It is mentioned that gross PPC will be 25,000. Here comes ANI. More than 1 lakh, of course. Can I say ANI is more than 1 lakh, so the personal allowance will reduce. You will not, Jazz will not get the entire 12,570. $12,570. Can I say less 105,000 minus 1 lakh? Bracket close into, take it 50%. 105 minus 1 lakh. Negative sign, negative sign. We need a negative sign as well. So Jazz will get the personal allowance of 10070. Now come here. Student, while solving on the spreadsheet, you have to do, I would say, 2 things. One, you have to properly show the reference of the working. Second, where possible, try to create the link as well. Repeat, do not write values directly. If you're writing values directly, you will be losing marks. So one, to show the working. Second, if it is possible, create the link as well. Another thing, any value which if you are solving on the calculator and putting directly on the spreadsheet, you will get 0 marks for that. Whatever calculation plus minus division you want to do it on the spreadsheet. And even there's no need to use scratch pad. Do everything on the spreadsheet. That is more easier than doing working somewhere else. Okay. So now let's calculate taxable income. This minus the personal allowance. Taxable income is here. Okay, so now we have to calculate revise income tax liability of Jazz. But you know that first you have to tax non-saving income. After that we will apply tax rate on dividend income. We cannot directly apply tax on the entire taxable income. First you have to tax the non-saving income. Then we'll go for the saving income. Number one. Number two, due to gross PPC, basic and higher rate band limits will also increase. So let us show working two where we'll be increasing the limits. Working two, gross PPC 25, basic rate band. What I'm doing, let me show my examiner. 37,700 plus 25. Bracket close. Now I'll show this. You can show this here, no issue at all. 37,700 plus 25. In fact, let's increase the higher rate band also, but that has no utility in the question. Higher rate band 1,25,140 plus 25. 125,140 plus 25. Okay, now come here. Student, first we have to tax the non-saving income, then I'll go for the saving income. Remuneration is 60,000, which means that, let me tell you, an entire 60 minus the personal allowance will fall in the basic rate band if I'm not wrong. So let's see. Remuneration. Now what I'm doing there is more important. Keep watching. Students, I'm writing 60,000 minus the personal allowance. Of course, entire 49,930 falls in the basic rate band. I'll take 20%. Now dividend income is 70,000. Obviously, we cannot apply directly tax rate on that 70. First, you will get nil rate band of £500, irrespective of individual's tax paying status. So dividend nil rate band is 500, 0%. Now let's see how much space is left in the basic rate band. Whatever space is left in the basic rate band, of course, then we will tax dividend income. And if there is any dividend income which falls in the basic rate band, applicable income tax rate is 8.75%. If it falls in a higher rate band, then it is 33.75%. And let me tell you, these income tax rates, they will be given to you in exam. So basic rate band, let me give the reference of working two now. How much space we have? It is 62,000. Minus, we have utilized this much and this. So we still have a space of 12,270 in the basic rate band. Applicable income tax rate is 8.75. Of course, now the remaining dividend income falls in higher rate band. Total dividend income is 70 minus this, minus this, minus this. So we are, what is this? Did we make any mistake? No. Just a minute. Dividend income is 70. And how much dividend income we have tax? 501,270. So the remaining dividend income is 57,230, which obviously falls in high rate band where applicable rate is 33.75%. So here comes your revised income tax liability. Jazz. Revise, it is, okay, you can use some formula. Stop. So we're getting 30,374.8. That is revised income tax of Jazz. Okay. Now we have to also calculate revise class 1 employee NIC. Why do I need to calculate that? You can see one thing, that salary remuneration is now changed. It is 60,000. So let's calculate. Jazz NIC when salary is 60. Okay. Students, 50,000, 270 minus 12,570. We will apply 8%. And these rates, everything will be given to you in exam. From 60, we will deduct 50,270. Now applicable NIC class 1 employee rate is 2%. So here comes revise NIC of Jazz. Student, story does not end here. When your organization is paying you 25,000 additional salary. 25,000 additional salary means, can I say 25,000 additional salary means, number one, that 25,000 obviously is deductible from 290 plus class 1 employer NIC will also change. So we need to calculate revised class 1 employer NIC. We have to calculate revised corporation tax. And whatever class, and due to, can I say, there will be increase in class 1 employer NIC, and whatever the increase in class 1 employer NIC comes, that will also be a deductible expense. That will also reduce corporation tax liability. Is that clear, student? Because your employer is paying NIC on your behalf. So obviously, from company's perspective, there is an allowable expense. Students, can you confirm that? Is that clear to you? Yes or no? Please reply. Can you please confirm? Okay. Now let's see. Malback Limited. Employer class 1 NICs. Already they have given us 3574. 3574 plus additional salary into 13.8%. 13.8%. So it will be 7024. And this 7024 obviously is deductible. But this, due to this 7024, additional NIC which we are paying on that 25,000, that is a deductible expense. Now let's calculate corporation tax. So you can say that revise employer NIC is increased by previous, it is now 7024. Previously it was 3575 or 74. Employer now we have to calculate revise corporation tax liability. Revise corporation tax. They have given us adjusted profit 290. From that 290, we will deduct additional salary, which is 25,000. We will also deduct additional NIC. Let me close the bracket. Whatever comes then into 25%. So basically, revised corporation tax liability is 65,387.5. So you can see that question itself is not difficult. But the main point is you should be, again, the same thing. You should be able to recall the relevant rule at relevant place. If you can do that, obviously question will not disturb you. Let us first discuss the next question on the OneNote. Then we'll be solving that question also properly on the spreadsheet. Okay, we are back to the OneNote. Calculate Anaya's taxable income. Okay, let me just a minute. Okay. No. Calculates Anaya's taxable income for the tax year 24-25. You should indicate by the use of zero any items which are not taxable or deductible. So if there is any item which does not require any adjustment, still you are not supposed to leave it. You have to just write 0. Let's read. Zoom in, zoom in. Anaya is employed by Zenith Limited and she also has some trading profit and property income. So there are 3 types of incomes: employment income, trading income, and property income. The following information is available for the tax year 24-25. Anaya receives a gross salary 70. So the straightforward the salary is 70,000. Great. From 1st October 24, Zenith Limited provided Anaya with a living accommodation. So you should be thinking for a accommodation benefit. The company purchased the property 2010 for 1 lakh, expensive accommodation. Its market value in 1st October 24 was 250. Now, 250. Now listen. From 1st October 24, Zenith Limited provided. So when Anaya received that property, before that ownership period, one, the property is expensive. Second, when it was handed over to Anaya, ownership period of the Zenith Limited is more than 6 years. So we will, while calculating additional benefit, we will replace the cost with the market value, which is 250. A further 4,000 was spent in improving the property in November 24. When you are spending, if you are doing any capital expenditure, logically capital expenditure of previous tax year will be added to the cost of expensive accommodation, not the current year. So 4,000 will not be considered in tax year 24-25. The annual value of the property's rental market value of rent 6,700. The living accommodation is not a job related. So it means we have to calculate the accommodation benefit, because we know that if accommodation is a job related accommodation, then rent benefit is exempt. Okay. From 1st October, if you count the time period, so I'm getting 6 months. October, November, December, and next 3 months. So 6,000, just giving you the reference, then we'll be properly solving on the spreadsheet. 6,700, 6 by 12 will give us 3,350. It's an expensive accommodation. So 2,50,000 minus 75,000 into official interest rate, which is 2.25%, into 6 months. So 2,50,000 minus 2,50,000 minus 75,000 official interest rate, then 6 by 12. Students, I'm getting 1,968.75. Oh, 19, what is this? Just a minute. Or you can say that 1969. Xena Limited purchased furniture for living accommodation during August 24 at a cost of 1,400. Students, if employees getting any asset other than first mobile phone, car, van, and accommodation, then usage benefit is 20% of cost of that asset. So 14,000 into 20%. Of course, Anaya started using this accommodation from October 24. So how many months? 6 months. 14,000 into 20%, I'm getting 2,800. Then 6 by 12 will give me 1,400. So this will also be a part of your accommodation benefit. So if I add all of them, 3,350 plus 1,969 plus 1,400. Student accommodation benefit, I'm getting 6,719. So the salary is 70, straightforward. Accommodation benefit is 6,719. Okay. Anaya paid a professional subscription 280 and subscription to health club 650. Neither of these subscription were reimbursed by the Zenith Limited. Now stop. When you are paying subscription to the professional body, that is an allowable expense if you're not getting the reimbursement. So 280 will be deducted from your employment income. But the subscription which you have paid to the health club, this is not a deductible expense. This 650 will not reduce your employment income. So we'll be writing 0 because this 650 does not impact your employment income. Neither of these subscriptions were reimbursed by Zenith Limited. The professional subscription was to an HMRC approved professional body directly related to her employment duties, and she uses health club to meet clients of the Zenith. So only we can maximum deduct 280 from the employment income. Let's see the self-employment. Zoom in, zoom in, zoom in. let's see. In addition to her employment, and selling. Anaya started and selling craft products. She spent 750 on advertising in March 2024, which included 100 spent on lunches for potential suppliers. So that falls in entertainment expense. It's not deductible. Entertainment expense relating to your if you are providing entertainment to your employees, then it is deductible. Otherwise, it is not deductible. So, and again, from this 750, you will deduct 100. Then begin trading as a sole trader from 1st June 2024, no issue at all. Even though advertisement was carried out before starting the trade, so that falls in pre-trading expenses. The time period is 7 years. For the pre-trading, allowable expenses will be deducted the day you have started your business. So from 750, you will deduct 100. So 650 is deductible, pre-trading advertisement expense. Entertainment is not deductible because entertainment to employees deductible. Anaya purchased a car on 15 June 2024 for 11,500, which she uses 60% for business purposes. The car has CO2 emission 47 grams per kilometer during the tax year 24-25. Anaya drove total 23,000 miles in this car, incurred motor expenses 2,300. Anaya decided to claim flat rate mileage allowance in respect of the car. If you are going for flat rate mileage, it means that uh, number one, we need to find out business mileage. All 23,000, they are not business mileage because 60% of the car is used for the business. So 23,000 will take 60% of that, which is 13,800. First 10,000 should get 0.45 allowable expense. After 10,000, 3,800 into 0.25. This is how you will get allowable expense in a flat rate scheme. So of course, entire 23,000 mileage, they are not for the business purposes. We took 60% of that. First 10,000 into 45 pence per mile, and after that, over and above is 25 pence per mile. You will get allowable expense under flat rate scheme. In the 10 month from 1st June 24 to March 25, Anaya made total cash sale is 9750. So from this cash sales, you will deduct advertisement, not 750, that is 600. And then whatever, according to flat rate scheme, whatever the expense comes, that will also be deducted and you will get trading profit. Okay. Property income. Anaya rents out a furnished room in her main furnished room. In her main residence, she receives monthly rent of 800 throughout the tax year. 800 into 12, 9,600. She paid expenses 275 in a month in relation to room what was rented out. Anaya always uses the most benefit. Student, we have to compare 275 into 12. Let me check what is the amount of the expense in the entire tax year. I'm getting 3,300. So can I say instead of this, we should be claiming a rent room relief, which is 7,500. Either you can deduct allowable expenses from 9,600 or rent a room relief. Obviously, I will choose the option which is more beneficial. The option which gives you lower taxable income, that is more beneficial. So logically, your property income is 2,100. And I always use this most beneficial to calculate her taxable property income. So let me solve this on the spreadsheet. Let me share the spreadsheet with you. I've already explained that almost the entire question 32 on the OneNote, but now let us solve on the spreadsheet. Question 32. We are required to calculate Anaya's taxable income. Anaya taxable income for the tax year 2024-25. If you read the first line, it says Anaya's gross annual salary is 70,000. So let us first calculate employment income. Okay, let me take salary here. Salary is 70,000. Now let us calculate accommodation benefit. Working one. I want to show the working here. Accommodation benefit. Point number 2. The student annual value of the rent was 6,700 and this property was handed over to her on 1st October 24. That is why 6 months. Annual value. 6,700 multiply by 6 by 12 bracket close. Now let me show here. 6,700 into 6 by 12. The student annual value we are getting is 3350. Okay, what else? You can see the rule we have already discussed. Since the ownership period is more than 6 years before the property was handed over to Zenith and it's an expensive accommodation, so that is why cost will be replaced with the market value. So let's calculate additional benefit. Simply ownership is more than 6 years. How I am calculating? 2 lakh 50 minus 75,000 bracket close into 2.25% into 6 by 12. And there was, I think, something regarding furniture. Zenith purchase of furniture. So take here. Taxable benefit. The value is 14,000 multiplied by 20%. Whatever into the percentage into 6 by 12. So that will give us the accommodation benefit. So we're getting accommodation benefit 6718. Working one, I'm also creating the link. That is the accommodation benefit. Professional fees paid for subscription is allowable. We will deduct that. So less professional subscription fee 280. Subscription to health we cannot deduct, so you have to write 0. Subscription to health club, 0. So that will give us the employment income. Let me use some formula which is available to us in exam as well. Otherwise, you can directly do the simple total. Now, student, let's discuss trading profit. Working to. Trading profit. Trading profit. What information they have given us? 10 months cash sale they have given us 9750. 10 months cash sales they have given us 9750. Let's take that. Cash sales 9750. From this cash sale, student, if you recall pre-trading advertisement 650 will deduct, not the 750. Less pre-trading advertisement. It will be 750 minus 100, bracket close. Pre-trading entertainment is not deductible. Entertainment. So I'll be writing 0. After that, students, what do we have? Then they have opted flat rate scheme, but 60% car was used in the business. So let's calculate allowable expense under authorized mileage allowance. Authorized mileage allowance. First, you have to calculate business miles. Logically, 23,000 into 60%. 23,000 into 60%. Oh. So they are 13,800. So first 10,000. 45 pence per mile. $0.45. Let me write the negative sign because it's deductible. After that, above is 25 pence per mile. So logically 3,800 into 25, 0.25. Okay, we have nothing else. So very easily we can calculate now. Trading profit. Cash sales minus this. Okay. Student, trading profit we are getting is 3650. We have to show this in the main format also. You have to give the reference of the working plus, where possible try to create the link as well. Now let's go for working 3, which is going to be a property income. Property income. Okay. Working 3, property income. Student, rent in the entire tax year is 9,600. Rent receive 800 into 12. Can I say we'll deduct rent a room relief less rent a room relief. Higher than allowable expenses. Okay, fine. So here comes your property income. Simply 9,600 plus this. Now come here, students. Total will give us the net income or total income. There's no other source of income. Just use the sum formula 2100. Less deduct, because they are asking us to calculate taxable income. So I have to deduct personal allowance also. 12,570. Here comes your Anaya taxable income. Thank you. So her taxable income, if I do the little bit rounding off, let me see. It is 69,619. Anaya's taxable income is 69,619. Let us go back to the OneNote again. Okay, just a minute. Okay. Student, look at this part B. Examiner says it is question number 33. So you have to properly give the reference. Let me explain again first on the OneNote, then I'll take you to the spreadsheet. Don't worry, there will be a little homework as well. Question 33. Oh my God. What is asking? Calculate the amount of income tax that Anaya saved for the tax year 24-25 by choosing the two claims flat rate mileage allowance instead of capital allowances. Instead of capital allowances, of course, she went for approved mileage allowance. Let's see. First of all, how much she has saved, let me tell you. 23,000 into 60% business mile, which we calculated. They were 13,800. So 10,000 into 0.45, allowable is 4,500. 3,800 into 0.25. Let's see. So basically, approved mileage allowance allowable expense under flat rate scheme is 5450. Anaya is a higher rate taxpayer. We have calculated taxable income, which means that logically, if I multiply 40% on 5450, how much tax she saves? She saves 2180. So due to logically approved mileage allowance, she has saved the income tax of 2180. Now we have to compare. If instead of this flat rate scheme, if she goes for capital allowances, then what happens? On car, we know that you don't get any annual investment allowance. Point number 3 of the self-employment. Anaya purchased the car for 11,500. Of course, a standard emission car. 18% is applicable, but business usage is only 60%. Business usage is only 60%. And her accounting period is of 10 months also. Capital allowances are available according to the accounting period. Now listen. 11,500, 18%, 10 by 12. Let's calculate what it comes. 11,500 into 18, 10 by 12. It is 1725. But entire 1725 will not be available to you as capital allowance. Only 60% of that. Why 60%? Because car is used in the business. 60%. Allowable capital allowance is 1035 plus motor car expenses, they are 2300. Again, entire 2300 is not allowable. 60% of that is allowable expense. 1380. So if she goes for capital allowances, allowable expense, capital allowance plus motor expense will be 2415. How much tax she will save? 40%. 966. Now listen, student, carefully. If she goes for capital allowances, logically she will be saving the income tax of 966. But due to approved mileage allowance, she saves 2180. So how much additional she is saving? 1214. Logically, due to flat rate scheme, she has managed to save additional 1214. I hope it is clear to everyone. She has managed to save 1214. Let me show you question number. What is the number they have given us? It is part B as well. It's question number 33. Let's see. So let me give the reference of question 33 because of this. Question says 33 of 35. 33 of 35. Pen, okay. Just a minute. Just a minute. Okay, the question is asking in 33, calculate the amount of income tax that Anaya saved due to flat rate scheme. Question number 33. Let me give the reference here. Okay. Simply business miles. Business miles. They will be 60% of 23,000, which we have already calculated, in fact. 23,000 into 60%. Approve mileage or authorized mileage allowance. First 10,000, 45 pence per mile. So 10,000 into 44, 0.45. Above 25 pence per mile. So 3,800. A Naya is a higher rate, the higher rate taxpayer. That is why, due to flat rate, Anaya manage to save income tax. How much income tax at, let's say, 40%. Now let me show you that income tax saving here. Income tax savings from AMAP. We'll take 4,500 plus 950, 40%. Now instead of this, if Anaya goes for capital allowances, so capital allowances, capital allowance on car. Look at this, students. Car was bought for 11,500. We took 18% of that, as far as I remember, then 10 months, because first accounting period is only 10 months long. Capital allowances are available according to accounting period. Then into 60%. Why 60%? Because car is used 60% in the business. Then there was maintenance cost, something like that. Car expense. Okay. Motor expenses, they have given us 2,300. Income tax saving. Students, look at this bracket. 1035 plus this, bracket close, 40%. Now, due to flat rate scheme, how much, due to flat rate mileage, how much she saves income tax? So, Anaya income tax saving due to flat rate mileage allowance. We'll take 2180 minus this. Oh, wow, just a minute. We did something wrong. I don't know what. Just a minute. Bracket this plus 2,300, bracket close. She saved 40%. 1,334 Okay. Just a minute. Let me check where we went. Is this correct? Let us check where we are making the arithmetic error. So motor expenses, we have to take 60% also because the car is used 60% in the business. So 2180 minus this. It is 1214. So student, you can see that I think we started at 12 o'clock. It's almost 3 now. Of course, there has to be a one homework also. Don't worry at all. This was question number 33. Now, student, there's a one question. The last question is on corporation tax. Take this as a homework. At least one question you should be doing it. But I would request first, again, you need to revise the corporation tax, then attempt this question. And when you will be attempting this question, while attempting this question, if you have any query within this question, you can always ask in your relevant WhatsApp group. I'll be available, inshallah. So thank you very much that you people have taken out time for attending this live session of tax. Tomorrow we'll be having a pre-scene mock session for PM, inshallah. So that is all about ACCA December 25 TX pre-scene mock variant UK. Thank you very much. This lecture will be uploaded on the portal. Don't worry at all.